Hi, I'm Jing and we are the 17th group. And our topic is small and medium enterprise bankruptcy costs. And first, I will give a short introduction about the bankruptcy costs. Then, Bingqing Liu will tell the direct in bankruptcy costs. Next, Xiyan will talk about the indirect bankruptcy costs. Finally, Shuna will discuss the evaluation of the bankruptcy cost. Let's start. And for the definition of the bankruptcy cost, it's also called financial distress cost, and it refers to the cost of financial crisis. It often occurs in companies with high debt ratios. The higher the debt ratio, the more difficult to achieve financial stability and the greater probability of financial crisis. If the debt ratio is too high, it will lead the companies to bankruptcy. Thus, they need to pay a large legal fees and liquidation costs, even if the enterprise has not bankruptcy yet. Too much debt will also affect the use of funds directly. Let the enterprises receive interference in the financing of the credibility, raw material supply, and product sales, and ultimately raise the weighted average cost of capital over debt enterprises. As for the classification of the bankruptcy cost, there are two forms of it, and the direct and indirect costs. In general, there are two common ways of understanding bankruptcy. One is the equivalent of bankruptcy liquidation. The other is that bankruptcy is a dynamic process of costly state verification. In fact, whether the business is recognized or liquidated, once they enter into the formal legal proceedings, they will have to spend a lot of verification costs. So the bankruptcy process will actually consume a lot of social resources, which only account for the restructuring or bankruptcy process directly account for the cost. Because once the enterprise is in a financial crisis, because once the enterprise gets into the financial crisis, a variety of opportunities costs will lose for the operating of low efficiency, which is also a waste of resources. And that's my part. Let's welcome Bingqing to talk about the direct bankruptcy costs.
Hello everyone, I'm Bingqing, and my part can be divided into two parts. The first part is the directly bankruptcy, and the second part is the level of the bankruptcy cost. As we all know, when the enterprise declared bankruptcy, a CF and stakeholders will bear a certain management cost. And direct bankruptcy cost causes the sum of the cash flow to decrease with references to the level on which it would be if the process had not occurred. Directly bankruptcy costs include legal and administrative expenses borne in connection with the bankruptcy as well as with the sale of the assets. The cost relating to the changing value of the assets in time. And let me show you the table. The table has some studies of the direct bankruptcy cost. The evidence indicates that direct bankruptcy costs are a decreasing function of size. And the other says in 2004, direct costs of the bankruptcy have a median value of the 8% of the firm value, but in early time, it only have the 4% of the firm value. And the second part is the level of the bankruptcy costs. The level of the bankruptcy costs may be measured using the following index. The formula can be shown in the PowerPoint. And the amount of the bankruptcy cost depends on external factors relating to the company, as well as on internal factors, which it may be directly influence. Internal has a business cycle of the economy, and the internal is about the size. As the company grows, the risk of the bankruptcy decreases. However, the economic cost of the bankruptcy will increase, and the amount of the bankruptcy cost may be estimated using Wellcome's model and the Topping Q index, which we also discussed in the final parts of our group. And let's welcome the next one to present, the Xiyan Xu.
Hello, I'm Xiyan Xu. This part I will introduce the indirect bankruptcy cost of SME. The indirect bankruptcy costs are the cost of avoiding a bankruptcy filing incurred by a financially distressed firm. When a firm is having significant problems in meeting its debt obligations, we say that it is experiencing financial distress. The indirect costs of financial distress are difficult to calculate with certainty. There are some studies about estimating indirect bankruptcy cost of corporate bankruptcy. According to Atman 1984, 10.5% of firm value measured just prior to bankruptcy. According to Anderell and Kaplan, they think indirect bankruptcy costs are 10% to 20% firm value. Obler and Tetman 1994 think financial distress costs are positive and significant. Povino 1999 stated prices received for sales of used aircraft by bankruptcy airlines are lower than prices received by distressed but non-bankrupt firms. Next, I will talk about the type of indirect bankruptcy. All sorts of opportunity loss, high cost of credit, and customer trust fall, resulting in a decline in sales, profits, and other indirect form of corporate bankruptcy costs. It can be divided into two classes according to its different source. Firstly, it is the market share loss. Titleman said after the enterprise into a financial crisis or is declined bankruptcy, customers, suppliers, creditors, and other stakeholders with negotiating their own risk control will take further actions on enterprise management. Obler and Titleman said, as the deterioration of the situation, most companies' abilities that can be attract and return employees, customers, and suppliers is decreases. The highly indebted companies in financial distress are more likely to lose a lot of market share. Second is management efficiency loss. Enterprises' financial ability is insufficient, and it causes all sorts of opportunity loss. On the one hand, because of the decrease of the enterprise credibility, they are unable to have internal and external financing. In addition, they are forced to give up some capital spending of high-risk, high-income projects. On the other hand, they have to bear the high discount for cash payment. Indirectly, bankruptcy includes both real loss of social wealth, also including the part of the transfer costs. Although this section does not pose a direct resources waste, it increases the speed of enterprise bankruptcy indirectly. Next, welcome Shuna to introduce.
Hello everyone, my name is Shuna Ye. In this part, I will introduce the explanation of the bankrupt risk. As my partner said before, when a company goes bankrupt, it is necessary to measure the cost of bankruptcy, including the direct cost and indirect cost. It is not easily to understand, but luckily, the scientific approach of measuring the cost of company bankruptcy presented by the Struck and Stephen. This is a model of estimating bankruptcy costs. The bankruptcy costs are equal to the direct bankruptcy cost plus the indirect bankruptcy costs. As we all know, the indirect bankruptcy cost is very difficult to estimate. So in this model, we assume that indirect bankruptcy costs are equal to the decrease in the expected wealth of the company's owners, indicated as the difference between the company's potential gross value and its liquidation value. The company's potential market value is the value which it would have if it did not experience payment difficulties. This model underlines the impact of bankruptcy costs on the company's value. If there are no financial difficulties, the undertaking's value is the market value. In the case of forced liquidation, the company's owner and creditors receive only the gap between the company's potential group market value and its liquidation value. Therefore, the bankruptcy cost is composed of the difference between the company's market value estimated with the assumption of going concern and the lack of financial difficulties and the net proceed from the company's liquidation. If the gap between the company's potential gross market value and its liquidation value is less than the company's liability, the bankruptcy costs are not only borne by the company's owner but also the creditor. Of course, different companies have different situations. The evaluation of the bankruptcy cost is dependent on one certain company's details. Thank you for your listening.